Now let's look at calculations related to carry trade. So let's say a trader enters into a carry trade strategy by borrowing 10 million pounds and investing in 1 year US LIBOR. So we have the spot rate today for dollar to pound and the expected spot rate 1 year later. And we have the 1 year UK LIBOR rate and the 1 year US LIBOR rate. So let's calculate the all-in return on the carry trade position after 1 year, and we'll measure this in pound terms. So to do a carry trade, we'll have to borrow at the currency with the lower rate, which is a pound here at 1.04%. Then we'll invest into US dollar, which is at 2.63%. So let's start. So first off, I'm going to borrow, 10 million pounds. And since I'm going to borrow it for 1 year, the rate is 1.04%. So that's 1.04%. So of course, then I will convert this pound into US dollars. So when we convert pound to US dollars at the spot rate today, it's at 1.28. So when we multiply by 1.28, we'll get US dollar 12.8 million. So what we're going to do is we're going to invest this at the US LIBOR rate of 2.63%, and we're done. Now let's fast forward to 1 year later. So your borrowing in pounds here will now be worth 10 million multiplied by 1 plus the borrowing rate of 0.104. So that's pound 10.104 million. So that's your borrowing amount. Now, of course, for the US dollar investment, so again, 1 year later, the amount is going to grow, at a rate of 2.63%. All right, so the investment value will be $13.1366 million. So that's how much your investment will be. So of course, we have to convert this amount back to pounds. And to convert back, the expected spot rate 1 year later is 1.3. So when we are converting from dollar, we're going to sell dollar and buy pound. So when you convert back, we have to convert back at 1.3. So we divide by 1.3 here. So taking 13.1366 divide by 1.3. So the converted amount in pounds will be 10.1051 million. So this is how much your investment will be worth, and this is how much your debt will be. So what's your gain in this? So if I just bring it here, so your gain from this position, is in pounds, 10.1051 million. This is how much your investment is worth, minus your cost of borrowing, which is 10.104 million. So net, this will, in pounds, this will be 0.0011 million. Seems small, but your return here, so your return in this case, based on the initial point, we borrowed 10 million, remember? So your gain here will be 0.0011 million over 10 million pounds. Then we convert to percentage, so that will be equal, equals to 0.011%. 0.011%. So take note that we call this is the net return, of the investment. Now, of course, in the exam, if they are asking you to calculate the gross return, then we will have simply take the final value of the investment, which is 10.1051. Then we'll minus the initial borrowing, which is 10 million. This is how much you borrowed over 10. So this would be just 1.051%. This is the gross return. If you want the net return, we'll minus the cost of funds, which is 1.04%. So the net return will be 1.051% minus the cost of funds, 1.04%. So that gives us 0.011%, which is the net return that we have here.